So today we're just going to go over confluences. Who knows what a confluence is? So I have about 2 to 3 confluences, sometimes 4. But who knows what a confluence is when they actually trade, or when they go to place a trade? Does anyone know what confluence is? Well, it's more of a special term, but it's what the traders call it. I like to call it confluence. Pretty much, yeah. So confirmations when you need to trade. I'm going to go over my confirmations and I'll show you in practice and how I do it. And then obviously you can either copy it if you want to, or make your own up. But again, it's literally just come down to the more you practice, the better you become. Again, it's like driving a car. It's like doing everything else. As long as you put it to practice, you'll be fine, trust me. So with confluences, right? Confluences are reason to buy or sell the trade you're about to do. Let me just get a little text up right now. Cool. All right, sweet. So a confluence, right? Confluence. I think that's the split. A confluence when I trade is I want to trend. I always trade with the trend. So whatever the trend is saying, I always trade with it. Trade with the trend. Meaning, if it's uptrending, you only buy, sell. If it's downtrending, you only sell. Regardless of whether or not you want to make the most pips, anything like that. If the trend is going up, you should only be buying only. Do not sell the pullback. I promise you, you will lose. Well, you won't lose, but you will see that you win some of them, you'll lose some of them, and it's just going to hit break even all the time. It's not worth the hassle and all that stuff. So again, don't be greedy, because I used to be like that. And then you just hit break even all the time, and it's not fun, because you're literally getting stressed out over the losses and when you really shouldn't be placing them. So literally only trade with the trend. I like to a trend line to meet up with that, to meet up for when to buy or sell. And I like a Fibonacci level. Fibonacci, when I say spell it, level, preferably 50 to 618. 618, purely because of risk to reward. Again, I'll show you. Obviously, I can't go over Fib right now. I have got a YouTube video if you want to watch it. But I go over Fibonacci, how to use it, and also I like MACD / RSI divergence. Divergence. I want all of these, or most of these, to be met before I even trade, before I even think about it. So if only one of them is met, then I won't trade. I'd literally leave it. Remember, you're trading with real money. You don't want to be risking like just unnecessary amount just because you feel like it is going to go the way, but then your actual risk isn't managed well. So this is why you lose, and it's just constant losses and upsets and all that stuff. So it's not fun. But those are mine. You can copy it if you want to. And sometimes I like to look for maybe a prior low is met. This isn't always, I'll show you what I mean. This is a new strategy I'm trying to develop at the moment. It's about 70% accurate at the moment with this specific one. This one here is pretty accurate. So again, you can copy them if you want to, or you can just find out stuff new, like you can use Bollinger Bands or stochastic and all those good stuff. If whatever works for you, really. So again, this may not work for you, but this works for my specific type of trading. Whereas if you're like a 1 hourly, 30-minute type of trader, this may not work as much. This works for like good 4-hour trades, 4-hour charts, daily as well. And again, if you want to copy, you can. So those are mine. And I'll show you what I mean by this. And I'll show you types of trades to look for. And I'm going to go over obviously more market structure as well. Again, re-emphasizing on the fact that it's very important to actually understand it and understand the type of trend you're in. Because everyone knows you're in an uptrend, but then you don't really try and get the perfect entry point because you haven't got confluences. And pretty much the way everyone's heard this before, but let's see. So you buy low, sell high, right? That's pretty much what trading is. Sell high. You need to really put that in your mind that you want to try and buy it at the lowest point, under using Fibonacci and stuff like that, and try and find the lowest point. Again, I do. I mean, my moving averages, I don't use them specifically for like trend direction and stuff. I use it for more of the fact that no, it's fine. More of the fact that if it there might I'll show you what I mean on the chart. So you see my moving averages, right? Or actually on the chart itself. What I'm trying to figure out is if this crosses before the trend line, it's more unlikely to break it. So you see on this example that the moving averages were above. So if the blue is on top of the red, it's uptrending. And if they cross before the trend line is touched, then it's more likely to break it. But again, I don't really focus on odds match. I probably look at it like once a month, if I'm honest with you. But again, it's always good to have like a moving average. Maybe have like a 50 moving average or 200. And when they cross, then it's pretty accurate. That's a direction change, if you want to have them or not. Sometimes people don't even look at moving averages. You can delete them if you want to. You can have naked charts if you really want to. But again, I think they look nice as well. So it's up to you. You've just got to figure out what works for you, pretty much. So again, I'm going to show you what I mean by this. So for example, I'll show you a trade. CAD-CH, is it USD-CHF in it? USD-CH. Again, this is a more of a swipe trade kind of risk to reward. Again, my TP was all the way at this negative 27. It hasn't hit it yet, but I'm very confident that it's going to hit it. So again, about 220 pips or so, more or less, depending on what your entry is. But again, this is more of just my swipe trade kind of risk to reward. Don't know why. I'm honest with you, ask Videsh, like, why can't I do like a 200 pip TP? And he's like, I can't. I was like, all right, fair enough. That's fine, that don't matter. As long as you aim for what you're aiming for, it's perfect. So again, trading with the trend, right? The trend here is downtrending. From here onwards, it's downtrending, meaning you should only be looking to sell in this area. So even if you know it's pulling back, if you want to trade this, well, I don't recommend it, but there are certain people who want to do that. Drop to like the 15-minute chart. Again, it's very confusing on how the 15-minute works. It's so volatile. You see, you can't really draw a fib on it properly. It's just so edgy, if that makes sense. Again, that's why sticking to a time frame that actually works for you is very, very good once you find it. So again, the 4 hour may not be good for you. You find maybe the daily is perfect for you, and you analyze everything on a daily, and then perhaps drop down to like the 1 hour for entries and stuff like that. So like candlestick formations if you want to, or that kind of stuff. That's for entering. But if you're using the 1 hour time frame and you're more of a 4 hour type of trader or a daily, don't analyze the 1 hour. Literally just drop down once it's at your entry that you want to roughly enter at, and then maybe look for candlestick formations and all that good stuff. Does that make sense? So again, just try and find the type of trader you are, and once you find it, you'll know, because you'll feel like, okay, I really understand this right now. Everything's going well, perfect. And again, once you find it, you'll know. So I'll show you what I mean by this. So if I just delete here, and I'll delete this channel here, I'll delete this fib, and this fib. That's perfect, right? So for example, you do your support and resistance, maybe find dynamic resistance, which is right here. This is the new strategy that I'm working out. Nisa had all 4 of those confirmations were met, and that's why I'm more, and obviously news helped it out as well. But again, I'm trying to find out a new strategy that is working so far. But again, I'm just going to try and adapt it to make it more accurate and stuff. So again, when you open up a chart, right? And actually, let me start from the basics. I'll start from the real basic chart. So I'm just trying to figure out, okay, cool, I've got it in there. Okay, so for example, right, let's just mark out the entire chart from scratch. So what do? You go on a daily time frame. So on a daily time frame, you look for trend lines. Literally, legit, we'll look for trend lines. And then maybe look for support and resistance on the daily. Don't do too many, purely because you're just going to confuse yourself and it's not going to be great. Again, just draw trend lines. As long as they're 1, 2, 3, and a 4th attempt at broke, and you know it's going to retest this region here. And again, you can do more support and resistance if you really want to. Zoom out on the daily and look for where pretty much price is touching and then shooting down. Touching here, shooting down, touching here, shooting down. So you know that all these regions here, what I used to do, right? Now I don't really have to do it. I don't do it anymore, but this is what I did at the start when I was learning. What I did was this. Let me show you. If you're confused on how to find support and resistance, if you go area, and legit just look for where like big spikes happen. So you know that this area right here is a key level of support and resistance, right? Purely because you've got loads of wick rejections there. Whenever it comes to around this region, look, retest, break, retest. So you know whenever it comes to this region, it's going to do something mad, right? Perhaps it might break out, but then it's just going to go back into trend. You know it's going to do something mad. So that's why you perhaps can go on the area if you really want to. I don't do that anymore because, again, the more you do it, the easier it becomes. So legit, just find something like that. Maybe do another few at the bottom if you really want to. Don't have to. Just find the key area. So you know that this right here is a lot more key than all the ones down here, right? Again, sometimes the charts aren't always as nice as this. But you know, it is what it is. And again, identify the trend. So again, if we do our circles, right, the patch structure, you know it's uptrend because you've got high highs and high lows. So we've got the low here, got the high high, got the higher low, because that's higher than the previous low. What the fuck? Don't know that. We've got the higher high, because that's higher than the previous high, which is here, or here if you want to be specific. We've got the high low, and then we've got the higher high. Got the high low there, the high high. So again, now what's the most important part of the structure? This right here. You can say it here. Maybe if you drop down to 4 hour, you might as well say it's around in this region here, because that was the first big move up that really shot it up and made it to a higher high. But again, it's really how you see the market and whatever works for you. I personally would have done it to around here, purely because like this is just uptrending a little bit, and then this right here was the first like spring that really made it push. So again, that's where I would have done my shift. You'll figure it out, and as long as you are getting it around the same region, it doesn't matter as much as long as it's not massively different. Something like this says, if you say, "Oh, that's the most important part," it's really not, because again, that's the first move up, or you can say it's here because this was the spring that really shot it up. But you'll figure it out. Trust me, it comes to you. It's all good me teaching you, but if you don't put it into practice, you're never going to actually see the results you really want. So again, map out the structure of the trend, do the circles if you really want to, don't have to. And then again, drop to the 1 hour or the 4 hour, and then do more trend lines. So maybe draw a trend line going up. Remember that trend lines can go like up and then down. Does that make sense? So again, you can see more trend, right? Where's the trade, or where's the actual momentum? It's going up. So you see how it's doing like that kind of shape. So you know that is a trend forming. So as long as there's high, or see here's the high, right? So this is the high. You know, we made a lower low, we made a lower high, lower low, lower high, lower low, lower high. So once you see lower highs and lower lows being made, you know that there must be some kind of trend forming, right? And this is when I drew out my trend line. I thought, okay, cool, it's mapping out, it's doing more structure. Let's do the circles again. We can do one up here, one down here. You can do one there if you really want to. This is a low. This is a lower high. Again, lower low, lower high. So now what's the most important part? This one here, purely because it made a low. It broke past this low here. And that's why this is the most important part now. So if you make that red, if you really want to make a change, maybe put horizontal line, because if you know if it breaks past this line, it's shifted momentum to the upside. So again, before this even made a low, this was the most significant part of the downtrend, purely because there was a lower low below it. Does that make sense? Even if it broke down to here, that is still the most significant part because there's a low below it. So you got the trend line, right? Now what do? We look for Fibonacci. So again, you put it from the lower high to lower low. And again, our golden pocket is that 6P18 to 50 region. it came up to retest the actual trend line, which is here. So the 71 to 618, if you really want to be specific. And then also we retested the prior low right there. So this is more known as dynamic resistance, purely because like this is a little move in the market. So that's an area of where like the buyers are starting to try and take control. So like floor and ceiling, right? Broken the floor, so now being retested as a ceiling. And again, you've got the trend line, we've got that. We've also got some divergence as well. So you see how, if I do this right now, this should make sense. For those who don't know what divergence is, whereabouts is it? I can't find it now. This one here. Okay, cool. So those who don't know what divergence is, I put a line there, right? And then a line where I want to get to about here, right? Where I've actually done the chart up to. From this region to that region, there's some divergence happening purely because if we look where this line is on the chart, right, and it's marking out here, if we put our trend line tool, right, and we pull it from where this line is, right here, to the next one, right here, you see that that's up and that's down, and then this is low and that's high, and that's more of a confirmation that the sellers are starting to try to take control more. And you see how although that met up, and again, it shot it down. Another example is USD CAD. Again, I can show you that. USD CAD. Again, we've got a trend line. If I show you from smooth here, right? Let's just do the whole chart again. Larger time frame, right? Again, you can do more trend lines if you really want to. Like here, the trend line. And again, maybe draw out some more support and resistance if you really want to. You don't have to. Go on the area if you're confused, and then look for where the big spikes happen. So there's a big spike around this area, boom, boom, and then maybe one's up here as well. So will this area ranging on the actual support and resistance? Again, back test, zoom out, and see is it at a key level of support and resistance. So again, yeah, it's retesting it all. That's fine. And then again, drop to the lower time frame. Change back to candles, obviously. And then draw out more trend lines. So that right now, if we draw a little brush, right, this is the low, and this is the high. This is the high low. This is the high high. This is the high low. This is the high high. So now that it's consistent of high lows and high highs, you can draw a trend line. Does that make sense? So you can draw a trend line coming from there, trying to touch as many as you can if you want to, up to there is where I drew mine up to. And again, I had bias that it was selling anyway, although it broke above this trend line. You would have thought it was going to come back, retest it, and then go up again. But again, if you look at the structure of the market, what's it telling us? Telling us that it's going to sell, right? Because again, it broke past this prior low. Does that make sense? And now once it's broken past there, there's a shift in momentum. So again, you can put your horizontal line across it if you really want to. That wasn't tested as dynamic resistance. It just came up to retest this trend line. So that's why it's important to have more, if there are any, more than one trend line, purely because that if it's perhaps broken past here, you would have thought it's going to buy now. But it's shifting momentums, and it's more unlikely going to retest this trend line here. And then what you do, you pull your fibs from the high to the low, and then the 50 to 618 right here. It's our key level. This missed my entry anyway, but it doesn't matter. I caught the other trade, so it doesn't matter as much. Again, there aren't any good trend lines. Again, don't try and do trend lines like this, because they don't work as well, if I'm honest with you. They're more likely just to be broken. That's why I like to stick with the overall structure. I like when the big swings happening, I like to draw the nice trends. And is there any divergence? So again, let's get our little cross tool, pull it from this high here. This, we'll say that low, all that low is where I pull it to. Now that the sellers are starting to take control again. Because again, this is high, and this is low, and this is low, and this is high, that's more divergence, which means a more multiple confluences when to enter that trade. Does that make sense? And now look at it, boom, shot down. Obviously this moves, USD CAD moves with oil. And if you look at oil, oil's rallying, right? Oil is moving up. So that's moving up, USD CAD moves down. Make sense? So again, it's like DXY. I don't trade oil as much. Maybe if you want to stick like a 5 lot on it, but I'll be very careful because oil just moves mad. So you see how we're drawing out the circles now. So what's the most important part of this trend here? Actually, we'll show you. We'll show you here. Trend line, right? Let's draw a nice trend line. Let's see. Let me just see now, actually. Cool, let's zoom out. Again, you can just play around with the trend lines. You don't have to be perfectly touching all the wicks. As long as there is in multiple areas, again, that's perfect for me. Perhaps you could move the trend line if you really want to be specific to like all these from here. And then move that up if you really want to be specific. So you've got 1, a fake out, 2, 3, and the 4th attempt broke. We went to retested around the region. So again, if we look at the structure, what we're looking at, the circle, I've already done it out for you. So again, this is the most important part. Change that to a red. So make the higher. You wouldn't thought that if, let's do Fibonacci now, let's draw it from the low to the higher. Try and enter on that 50 to 618, which again is on a dynamic resistance support line, if you want to call it. And then boom. But again, because it's been rallying so high for so long, it's got to make some type of pullback. So it just made it to move down. If you look on a daily time frame, shifting momentums as well here. So again, if you use our fib, look at the larger time frame, you know that it's around the 618 to 50, so it's going to start making this pullback now. And again, we tested the prior low as dynamic resistance. Does that all make sense? So just put a 111 if this makes sense. If it's all making sense, just a 111 into the chat box. Cool. So it's very easy, right? It's nothing complicated. You just can't make a chart simple. Once you make them simple, I promise you, you'll start to see the results you want to see. Don't overcomplicate your trades. Once you do, you'll see that your overall trading is going to go pretty bad because, again, you're just trying to overcomplicate yourself, and again, it just doesn't look nice. So see how now if you look at a larger time frame, you can't just keep buying it forever because you need to look at the larger time frame, like the daily or the weekly, whatever you look at. You know it's shifting momentum. So again, you know that it's going to make a pullback and then drop. Again, this didn't drop as much, but this is more news. That's rallying it up because if you understand how oil works, it works with like what the Americans say, and one of them said something, they want to rally oil to around this region up here. So pretty much it's just moving with the news. Because banks primarily trade the news anyway. They obviously use support resistance, but remember the news is what really rallied the currency pair. So you know if, like, for example, there was the best prime minister we've ever had in this next election, which probably will never happen, and this one here. But if there is, for example, and he makes the best choices ever, you know pound is going to increase. It's going to increase in value because we have the best prime minister. So this is when you start to actually understand how the news affects it all and all that good stuff. Make sense? Cool. And again, let's look at some more. So I wouldn't, this is just examples of shifts and momentums on the larger time frames and looking at the higher the time frame. So if you're confused about where a trend is moving to and it's just consolidating forever, look at the daily, look at the weekly time frame, and that will tell you what's going on. Again, let's look at another example right now. Euro USD. I know me and Mr. Yusuf Bello, if he is, I believe he was on the call. We both bought, yes he is, we both bought Euro USD, right? And I'll show you why we bought it. So again, can you see how now this is all just mapping out? We're mapping out the chart, we're mapping out how it works. It's very simple. This didn't test the highs of dynamic resistance, doesn't matter as much. It tested this one here that's not as important. I'll show you why. So again, I actually just delete everything. Larger time frame. So remember, whenever you mark up larger time frame, always draw trend lines. Again, don't overcomplicate trend lines. I used to draw trend lines like zooming out as much as I can, and then trying to draw it in like, oh, look, okay, cool, let me try and draw that in. Again, it just looks sloppy, doesn't look best. So try and draw trend lines where the overall trend is moving. So you know that it's moving down here, right? This is more of a fake out. You've got to identify fake outs. You couldn't really draw a trend line like this. Although, yeah, it's around that region, you've got to make it to where most of the wicks touch. So you know now, it's touched there, it's touched there, it's touched there, there, broke, retested it, and moving up. Again, you can do more support resistance if you really want to, but what we're focusing on is confluence. So you can really, let's just zoom out. Your USD isn't a good example. Let's just test out these prior highs here. So again, we can say that's an area of support resistance. That is an area right there. That is an area right there. So these are trying, you can say they're pretty accurate support resistance. Drop to the 4 hour. Again, what do? We draw circles and mapping out the chart, right? So we're looking for high highs and high lows. We've got the low, we've got the high. That's the high high. If you want to be accurate. So again, let me just change the color. We've got the low here, right? So now you know it's starting to trend because it's making high highs and high lows. So again, we've got the low here, we've got the lower high, the lower low. This is just news, that doesn't matter as much. We've got the lower high, the lower low. And once make it lower high, it just pretty much, probably back by about 2 pips, broke past it. But I'd like closure below it. So again, you can say either that is it or that is it. Purely because, let me just trying to work out, because some people will do it there and some people will do it there. So again, this is obviously Euro USD is a weird example. This hardly ever happens when you're just confused on where to do it from. I personally done it from there because that was a low, a nice low, and that made the lower high, and this broke it past by like 1 pip, 2 pips. So again, you don't really, I've focused it more there. So again, we can change this red if you really want to. Let's change it to a red. 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 And now what do? We know it's shifting momentum because it broke past it, and there's a nice closure. So again, what do? You fib up the move, right? You go from the low to the high in the market. And what's our golden ratio? This came back to retest this trend line. So again, you would have thought, okay, it's got to retest the trend line, right? Because whenever it breaks past the trend line, it's going to come back and retest it, hopefully. So I wouldn't have put it here. I would have put it here at the time, now that I see it. But again, you know that a trend line's met up, a 50 to or 618 is around the trend line area. What else we've got some divergence. So when we're looking to buy it, we're looking for divergence at the bottom. So again, if we get our little cross talk, we go from the low, which is right here, to the high, or this bit here. Well, I got it to here when I wanted to enter. And again, you used to know that it started to divert away from each other. So if we go from, one sec, this is just weird. So if we go from this low here to here, and you see how that's high, or that's low, and that's high, and that's high, and that's low down there. That's divergence, and what that does, it like springs up and pushes it up. Think of it as this: if the line is on the bottom, and you're looking to buy it, which is here because you know it's shifting momentum, so now you're looking to buy it. Look at the bottom. For RSI, it will be pretty much the same. You'll see it; it's legit, completely the same. Although it's just a line. You see how now we've got just confluences at our trades. This is very good reason to buy it. because you know you've shifted momentum. Okay, now we're looking to really catch the big first wave up. And then you've got some divergence, you've got some trend line meeting up as well. And all these really good confluences to help you trade. And once these are all met, you know that the trade's going to be well. And then again, if you look at measured move, so you take the average of one move, copy and paste it, pull it to whereabouts we want to enter, and you see how that takes up next to this next prior support and resistance area, if you want to call it. And again, you can obviously just do more long position, whereabouts you want to enter. Here is where I put it, and into a tiny bit of drawdown, which is okay. I had about 40 pips stop loss. So I want a bit of breathing room, 40 pips, and then TP is all the way up here. Again, see how now risk reward is 5, which is obviously great. And obviously now that's pulling back. What are we going to do? If you want to re-enter Euro USD, what do? You flip up the move. Flip up the move. Prior high or the dynamic resistance is right here. And again, the 50 to 618 region, and then you rally it up to this high if you're going to re-enter. And maybe you can draw some more trend line if you really want to. You can draw a trend line coming from down here up, like this, and you know it's starting to pull back. It will come like this. It will move like this. It will go like this. If it's pull back, hopefully if it trends down, and it'll come to this region here between the 70 to 618, and then we'll look to buy it again if you really want to trade Euro USD. And then down here is we'll look for more divergence. So this hopefully will be there, higher, and then by the time it gets down to here, it'll be very low down here. So that's more confidence to buy it. Does that make sense? Just put 1, 1, 1 if this all makes sense. And why I trade and how I trade and all that good stuff. Okay, cool, awesome. This is perfect, right? It's easy. Easy once you understand it. Cool. Now I'm just, remember, just wait for confluence when you trade. Once you trade and you know you have everything, you have to go above the previous higher height. It doesn't have to, as long as you know it's just shifted momentum, you know it's just breaking, you know it's just going to do this, make a pullback, go up. Remember, the market has to pull back. So it doesn't matter if it doesn't go above a higher. You know the market goes like this, it trends up on the 1 hour, right? Remember what I said about yesterday, as there's trend within trends. On the 4 hour, for example, if I show you, see how this is just a move up. But if we drop to the 1 hour, you know there's a trend within a trend. So again, you've got this move up, pull back, got the move up. See how now that's trending, or you can say that's the move, that's the pullback, that's the move, that's the pullback, that's the move. Terabyte out. But you see what I mean by that. So trend within a trend, and again, it doesn't really matter if it breaks above it, because you know it's starting to trend nicely now. So again, it's broken above these highs. So you know right here is shifting momentum again on the 1 hour. Perfect example. So you've got the high here, the low here, the low here, broke past. You know it's going to pull back and retest it. So now you know you've got all these shifts in momentum and all that good stuff. Make sense? So again, just try and look for this type of trading. This is the way I trade. Obviously, it may not work for you, but it works for a lot of other people. And legit, just put it into practice. Does that make sense? So if you do need help, feel free to message in the chat or me. And then we can, obviously, tomorrow we're going to do Elliott Wave, which is very, very important. Yeah, I've moved everything to above stop profit. Again, that's my MetaTrader if you want to see. Again, right now, I'm just waiting for it to pull back. And you know it's shifted, so you don't really need to matter as much. Cool. So we're literally less than a minute. So if it cuts off, it cuts off. So you can leave if you want to. It's legit going to cut off in the next 20 seconds. So I will see you tomorrow. And legit, just put this all into practice. Yeah, once you put it all into practice, your trend line meeting up, MACD divergence, all this good stuff, Fibonacci, you'll see your trading style, your way you profit increase a lot. Makes sense? Sweet. So So yeah, less than a minute, and I will see you tomorrow at 9 p.m. Have a good evening, or a good morning, or a good afternoon, wherever you're from, and I will see you tomorrow.